Based on the historical data and forecast, Bitcoin shows a downtrend with increasing volatility. The recent RSI values consistently hover below 50, indicating a weakening upward momentum. The forecast for the next week predicts a continuous decline, reaching as low as $94,200. Considering the support price of $85,200 and the bottom of the Bollinger Bands consistently below $100,000, a short position appears to be the most logical strategy. I recommend entering a short position at $99,900, placing a stop-loss order at $101,600, which is slightly above the recent Bollinger Band bottom, and setting a target price of $94,200, aligning with the forecast low. To refine this strategy, we can incorporate the RSI. If the RSI reaches an oversold level of 20, it might signal a potential bounce. However, given the overall downtrend and forecast, I would prioritize the short position. If the price retraces to $99,100 and the RSI is below 40, consider tightening the stop-loss to $100,200. If the price reaches the target of $94,200, consider taking partial profits and moving the stop-loss to break even to protect gains. This blended strategy combines trend following with volatility considerations for a potentially high-return investment. Based on the historical data and forecast, Ethereum demonstrates a downtrend, especially evident in the recent forecast prices. The RSI consistently fluctuates below 50, with periods of oversold conditions, suggesting potential buying opportunities. The Bollinger Bands show a contraction, indicating a possible breakout. Considering these factors, I propose a strategy combining trend following and mean reversion techniques. Specifically, I recommend entering a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price would be $3,010. A stop-loss should be placed just below the recent low of $2,510 to protect against further downside risk. The initial target price is set at the middle Bollinger Band, around $3,260, aiming to capitalize on a short-term bounce. To refine the strategy, we can implement a layered approach. After reaching the first target price of $3,260, we can move the stop-loss to break even to secure profits and allow for further upside potential. If the price continues to rise and touches the upper Bollinger Band, a second target price of $3,420 can be considered. However, given the overall bearish trend, a conservative approach is advised. If the price fails to reach the first target and shows signs of further decline, indicated by a break below the support level of $2,510, the position should be closed, cutting losses at $2,510. This combined strategy balances the potential for short-term gains with risk management, suitable for the current market conditions. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and slight upward movement. The RSI fluctuates around the mid-range, indicating neither strong bullish nor bearish momentum. However, the recent dip to $2.2 and the forecast price hovering around $2.3 suggest a potential opportunity for a short-term buy. We will implement a strategy combining RSI and Bollinger Band signals. When the price touches the lower Bollinger Band and the RSI is below 35, we will enter a long position. For example, if the price reaches $2.16 and the RSI is 33.5, we will enter a long position at $2.16. The stop-loss will be set at $2.14, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $2.3, aligning with the forecast price and the middle Bollinger Band. To maximize returns, we will use a dynamic target price based on the resistance level. If the price reaches $2.3, we will move the stop-loss to the entry price of $2.16 and set the new target price at $2.5, approaching the resistance level. If the price fails to reach $2.3 and the RSI reaches 80, we will exit the position at $2.3 and place a short position at $2.33. The stop-loss for the short position will be $2.35, and the target price will be $2.25. This combined strategy, leveraging both RSI and Bollinger Bands, aims to capitalize on short-term price fluctuations while incorporating risk management techniques to protect capital and maximize potential profits. Based on the historical data and forecast, BNB demonstrates a downtrend with consistent declines and a forecast predicting further price drops. The RSI consistently remains below 50, indicating a bearish momentum, particularly dipping below 30 on several occasions, signaling oversold conditions. The Bollinger Bands also suggest a downward trend, with the price frequently touching the lower band. Combining these factors, a short position strategy is recommended. We will enter a short position at $940, placing a stop-loss order at $959, just above the recent high. The initial target price will be $881, aligning with the lower Bollinger Band and the forecast price. To maximize returns and manage risk, we will implement a dynamic strategy. If the price reaches the initial target of $881, we will move our stop-loss to the entry price of $940, securing profits while allowing for potential further downside. If the price retraces towards $959, triggering our initial stop-loss, we will reevaluate the market conditions and consider re-entering a short position if the bearish trend persists. This adaptive approach, combining RSI oversold signals, Bollinger Band support, and price action, aims to capitalize on the current downtrend while mitigating potential losses. Based on the historical data and forecast, Solana exhibits a clear downtrend, particularly evident in the recent price action and the projected decline in the coming week. The RSI consistently hovers below 50, with several days dipping into oversold territory below 30, suggesting strong selling pressure. The Bollinger Bands are widening, confirming increased volatility and indicating a potential for further downward movement. Considering the support price of $139 and the forecast prices consistently below $148, I recommend a short position. The entry price will be $148. A stop-loss order should be placed above the upper Bollinger Band at $150 to limit potential losses if the price unexpectedly reverses. The target price for this short position will be the support level of $139, offering a reasonable profit margin while accounting for potential price fluctuations. The RSI is currently at 32.5, indicating that the asset is oversold and could experience a bounce, but the downtrend and forecast suggest that the support level is likely to be tested. To maximize efficiency, I propose a portfolio with 60% of the capital allocated to this short position, 20% held in cash to capitalize on potential rebounds, and 20% reserved for a potential long position if the RSI reaches an overbought level above 80. This diversified approach balances risk and reward, aligning with a high returns investment strategy. Based on the historical data and forecast, TRON shows a slightly upward trend with volatility. The RSI consistently hovers around the oversold level of 30, indicating potential buying opportunities. The Bollinger Bands suggest periods of contraction and expansion, reflecting the price fluctuations. Considering these factors, I recommend a long position strategy focusing on capitalizing on short-term bounces. Specifically, when the RSI dips below 30, enter a long position at $0.289. Place a stop-loss order at $0.281 to protect against a potential downward reversal. Set a target price at $0.297, near the recent resistance level, aiming for a quick profit. To refine this strategy, we can incorporate the Bollinger Bands. If the price touches the lower band while the RSI is below 30, it strengthens the buy signal. In this case, enter a long position at $0.283. Maintain the stop-loss at $0.281. If the price moves towards the middle band, consider adjusting the target price to $0.293. This combined RSI and Bollinger Bands approach allows for more precise entry and exit points, maximizing potential returns while managing risk effectively. This portfolio prioritizes quick profits from short-term volatility. Based on the historical data and forecast, Dogecoin shows a downtrend with consistent dips below the central Bollinger Band. The RSI consistently remains below 50, indicating a bearish momentum. The forecast predicts further decline, potentially reaching $0.146. Considering the support price consistently at $0.16, a short position is recommended. I suggest entering a short position at $0.179. A stop-loss should be placed at $0.182, just above the recent resistance level, to limit potential losses if the price reverses. The initial target price should be $0.16, aligning with the established support level. To refine the strategy, we can incorporate the Bollinger Bands. If the price touches the lower band, which is currently around $0.154, it suggests an oversold condition and a potential bounce. In this case, we could adjust the target price to $0.164. However, given the overall bearish trend and the forecast, the primary strategy remains a short position with an entry at $0.179, a stop loss at $0.182, and an initial target price of $0.16. This approach balances risk mitigation with the potential for significant gains in a declining market. Based on the historical data and forecast, Cardano exhibits a downtrend, especially considering the recent forecast prices. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands also suggest increased volatility with the price fluctuating near the lower band. My strategy will focus on capitalizing on this downward momentum. I recommend a short position when the price reaches $0.522. Set a stop loss at $0.53, just above the recent high and the upper Bollinger Band. The initial target price will be $0.487, aligning with the forecast for November 19, 2025. To refine this strategy, I will incorporate a dynamic adjustment based on the RSI. If the RSI rises above 30 and approaches 40, I will consider adjusting the target price to $0.468, aligning with the forecast for November 20, 2025. Conversely, if the RSI reaches 20, indicating a strong oversold condition, I will consider tightening the stop loss to $0.514 to protect against a potential short-term bounce. This portfolio combines trend analysis, forecast data, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend since November 13, 2025, with a forecast indicating further decline. The RSI consistently remained below 80, fluctuating between 29.4 and 44.5, suggesting a lack of strong overbought conditions. However, the recent dip below 3,500 triggered a potential oversold condition, with an RSI of 34.3 on November 13, 2025. Considering the forecast for November 14, 2025, at $3,510, I recommend a long position with an entry price of $3,510. A stop loss should be placed at $3,430 to mitigate potential losses if the downtrend continues. The initial target price is $3,700, aligning with the recent resistance levels and the center of the Bollinger Bands. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the bottom band around $3,510 and the RSI is below 30, it reinforces the oversold condition and strengthens the long position. If the price breaks below the bottom band, it signals a stronger downtrend, and the stop loss should be adjusted to $3,450. The final target price would be $3,800, aiming to capture a significant portion of the potential rebound. This blended strategy combines RSI signals with Bollinger Band confirmation for a more robust and adaptive approach, maximizing potential returns while managing risk. Based on the historical data and forecast, Bitcoin Cash exhibits a downtrend with periods of consolidation. The RSI consistently hovers around the mid-range, indicating indecision, but recently dipped below 40, suggesting a potential oversold condition. The Bollinger Bands show that the price has been fluctuating within a range, with the lower band consistently around $440 to $465 and the upper band around $574 to $584. The support price is stable at $472, while the resistance is at $517. Given this analysis, I propose a moderately aggressive strategy focusing on short-term gains. The strategy involves a long position when the RSI falls below 40, indicating an oversold condition. The entry price will be $490, coinciding with the forecast price on November 20, 2025. A stop-loss order will be placed just below the support level at $465 to limit potential losses. The initial target price is set at the resistance level of $517, aiming for a quick profit. If the price reaches $517, we will move the stop loss to the entry price of $490 to secure the gains and protect against a potential reversal. This strategy balances risk and reward, capitalizing on short-term price fluctuations while mitigating downside risk. Based on the historical data and forecast, World Liberty Financial shows a recent upward trend with increased volatility. The price has tested the support level of $0.13 multiple times, and the RSI has spent considerable time below the oversold level of 20, indicating potential bullish momentum. The Bollinger Bands have been expanding, suggesting increased price fluctuations. Considering these factors, I recommend a long position strategy. Entry price should be $0.132, with a stop loss set at $0.128 to protect against a potential downside reversal. The initial target price is $0.142, aiming to capture a significant portion of the upward movement. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 35 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. The forecast data suggests a stable price around $0.135 to $0.139 for the next week, further supporting the long position. If the price reaches the upper Bollinger Band, consider taking partial profits at $0.142 and moving the stop loss to the center of the Bollinger Band to secure gains and limit potential losses. The final target price is $0.15, contingent on sustained bullish momentum and positive RSI signals. Based on the historical data and forecast, Bitcoin Cash exhibits a downtrend with periods of consolidation. The RSI consistently hovers around the mid-range, indicating indecision, but recently dipped below 40, suggesting a potential oversold condition. The Bollinger Bands show that the price has been fluctuating within a range, with the lower band consistently around $440 to $465 and the upper band around $574 to $584. The support price is stable at $472, while the resistance is at $517. Given this analysis, I propose a moderately aggressive strategy focusing on short-term gains. The strategy involves a long position when the RSI falls below 40, indicating an oversold condition. The entry price will be $490, coinciding with the forecast price on November 20, 2025. A stop-loss order will be placed just below the support level at $465 to limit potential losses. The initial target price is set at the resistance level of $517, aiming for a quick profit. If the price reaches $517, we will move the stop loss to the entry price of $490 to secure the gains and protect against a potential reversal. This strategy balances risk and reward, capitalizing on short-term price fluctuations while mitigating downside risk. Based on the historical data and forecast, SUN token shows a slightly upward trend with price fluctuating within a defined range. The RSI consistently remains below 80, indicating the asset is not overbought. However, the RSI dips below 40, suggesting potential oversold conditions. The Bollinger Bands show the price occasionally touching the lower band, indicating potential buying opportunities. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. For instance, if the price dips to $0.0215 and the RSI is 35.9, enter a long position at $0.0215. Set a stop loss at $0.0213 just below the lower Bollinger Band to mitigate potential losses. The target price will be set at $0.0235, which is near the upper Bollinger Band, allowing for a reasonable profit margin. To refine the strategy, we'll incorporate support and resistance levels. If the price approaches the support level of $0.0222 while the RSI is below 40, it's a strong signal for a long entry at $0.0222. The stop loss will be set at $0.0220, just below the support level. The target price will be $0.0240, aiming for the resistance level. This combined approach balances the momentum indicators with the established price boundaries, increasing the probability of successful trades. The forecast data suggests a stable price around $0.0223, providing further confidence in this strategy. This portfolio is designed for high returns by capitalizing on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Curve DAO has shown volatility with a recent bounce from the support level of $0.421. The RSI has been fluctuating, indicating a lack of strong directional momentum, but it has recently moved above 30, suggesting a potential for a short-term upward trend. The Bollinger Bands show that the price has been testing the lower band, and the forecast indicates a continued downward trend towards $0.381. Considering these factors, I propose a contrarian strategy that aims to capitalize on short-term price swings. My recommended strategy is a long position with an entry price of $0.4, placing a stop loss at $0.396 to limit potential losses. The initial target price is $0.48, aiming to capture a quick profit from the recent bounce. If the price reaches $0.48, we will adjust the stop loss to break even at $0.4 and set a new target price of $0.5. This strategy combines RSI signals with Bollinger Band analysis and support/resistance levels to maximize potential returns while managing risk. The forecast suggests a downward trend, but the recent price action and RSI indicate a possible short-term reversal, making this a calculated risk. Based on the historical data and forecast, Maple Finance demonstrates a fluctuating trend with periods of both upward and downward momentum. The price has recently tested the resistance level of $0.471 and has been oscillating within a defined range. The RSI indicator fluctuates around 50, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show the price frequently touching the upper band, indicating potential upward pressure, but also suggesting a possible pullback. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 50 and approaches the oversold level of 20, specifically at a price of $0.429. A stop-loss order will be placed just below the support price of $0.431 at $0.428 to limit potential losses. The target price for this trade will be set at the recent resistance level of $0.451, aiming to capitalize on the observed upward pressure. If the price breaks above $0.451, we will adjust the target price to $0.471, the previous resistance. This strategy combines RSI signals for entry, Bollinger Bands for confirmation, and support/resistance levels for price targets and stop-loss placement. The portfolio will prioritize this moderately bullish strategy due to its potential for high returns while managing risk with well-defined stop-loss levels. The expected profit from this trade is $0.022 per Maple Finance. Based on the historical data and forecast, Uniswap demonstrates considerable volatility, with a recent upward trend. The RSI fluctuates significantly, dipping below 30 on several occasions, indicating oversold conditions, and peaking above 75, suggesting overbought territory. The Bollinger Bands have widened recently, reflecting increased price volatility. Considering these factors, I propose a combined strategy focusing on momentum and volatility. We will implement a long position when the RSI falls below 30 and the price touches the support level of $6.5. The entry price will be $6.5. The stop loss will be set slightly below the bottom Bollinger Band at $4.15, providing a buffer against potential downside risks. The initial target price will be the resistance level of $7.76. To capitalize on the forecasted upward trend, we will further refine the strategy by incorporating the Bollinger Bands. If the price approaches the bottom Bollinger Band and the RSI is below 30, we will enter a long position at $6.5. The stop loss remains at $4.15. If the price breaks above the upper Bollinger Band, we will adjust the target price to $7.76. If the price continues to rise, we will move the stop loss to the center of the Bollinger Band to secure profits and manage risk. This combined approach leverages both momentum and volatility indicators, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Zcash has shown a significant upward trend, breaking through several resistance levels. The RSI consistently remained above 70, indicating an overbought condition, but the price continued to rise, suggesting strong bullish momentum. The Bollinger Bands have also widened, confirming increased volatility and a potential for further price movement. Considering the forecast for November 14, 2025, at $575, I recommend a long position with an entry price of $540. To manage risk, set a stop loss at $520, just below the lower Bollinger Band. For the target price, I anticipate a potential rise to $650, aligning with the recent resistance levels and the bullish forecast. To refine this strategy, I will incorporate the RSI as a secondary confirmation. If the RSI dips below 60 during the trading period, it could signal a temporary pullback, providing an opportunity to add to the position at a lower price. However, the primary strategy remains a long position with the aforementioned entry, stop loss, and target prices. This approach combines the momentum of the upward trend, the volatility indicated by the Bollinger Bands, and the overbought signal from the RSI to maximize potential returns while mitigating risk. The support price of $443 should also be considered as a final safety net. Based on the historical data and forecast, Ether.fi shows a downtrend, particularly evident in the recent forecast prices consistently below $0.89. The RSI readings fluctuate but generally remain below 50, indicating a weakening upward momentum. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering these factors, I propose a short selling strategy. Entry price should be $0.886, with a stop loss set at $0.933, just above the established support level. The target price is $0.821, aligning with the lowest forecast price. This strategy aims to capitalize on the anticipated downward trend while limiting potential losses by respecting the support level. To refine this strategy, I will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 30, it indicates an oversold condition, potentially signaling a temporary bounce. Conversely, when the price touches the lower Bollinger Band, it might also suggest a potential reversal. Therefore, I'll adjust the entry price to $0.886 if the RSI is below 30 and the price is near the lower Bollinger Band. The stop loss remains at $0.933, and the target price is $0.821. This combined approach leverages both trend analysis and technical indicators to enhance the probability of a successful short position. Based on the historical data and forecast, Starknet shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates above 40, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands have been widening, suggesting increased volatility. Considering the support price of $0.147 and the resistance price of $0.167, a prudent strategy is to implement a combination of RSI and Bollinger Band signals. We will use a long position strategy when the price touches the lower band of the Bollinger Bands and the RSI is below 40. For example, when the price is $0.131 on November 20, 2025, and the RSI is below 40, enter a long position at $0.131, set a stop loss at $0.128, and target a price of $0.148. To optimize returns, we will create a portfolio with the most efficient strategies. The primary strategy will be based on the lower Bollinger Band and RSI signals, with adjustments based on support and resistance levels. If the price approaches the support level of $0.147 while the RSI is above 40, consider taking profits or tightening stop-loss orders. Conversely, if the price reaches the resistance level of $0.167 with an RSI above 60, consider taking profits. The portfolio will be dynamically adjusted based on market conditions, with a focus on managing risk and capitalizing on short-term volatility. The final portfolio will consist of 60% of the primary strategy, 30% of the support and resistance adjustments, and 10% of the RSI-based trading. Based on the historical data and forecast, Quant shows a generally upward trend, with recent volatility. The RSI indicates periods of oversold conditions, below 30, and approaching overbought territory, around 58. The Bollinger Bands suggest that the price is currently trending towards the upper band, indicating potential upward momentum. Considering these factors, I recommend a long position strategy. The entry price should be $84.5, coinciding with the first day of the forecast period. A stop loss should be placed at $80.9, just below the support level, to limit potential losses. The initial target price should be $87.3, aligning with the forecast for November 16, 2025. To refine this strategy, we can incorporate RSI and Bollinger Band signals. If the RSI dips below 30 during the forecast period, consider adding to the position at $84.7, with a revised stop loss at $82.9. Conversely, if the price touches the lower Bollinger Band, it could signal a short-term pullback opportunity to enter at $84.7. The ultimate target price should be $87.4, representing the peak forecast price. This multi-layered approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively.